A credit analyst plays a vital role in assessing the financial health of individuals, companies, or institutions seeking loans or credit. This position requires analytical precision, financial expertise, and a deep understanding of risk assessment. Credit analysts help banks and financial organizations make informed lending decisions by evaluating creditworthiness, analyzing financial statements, and determining appropriate credit limits. In this video, we will explore common credit analyst interview questions, sample answers, and expert tips to help you prepare effectively. Whether you're an entry-level analyst or an experienced finance professional, this guide will help you demonstrate your analytical ability, sound judgment, and attention to financial detail during your interview. Understanding the role of a credit analyst. A credit analyst's main responsibility is to evaluate the financial condition of clients or companies and assess the likelihood that they will repay loans or meet financial obligations. This involves analyzing balance sheets, income statements, and cash flow reports, as well as studying market and industry trends. Employers look for candidates who possess strong quantitative skills, financial acumen, and the ability to interpret complex data clearly. Additionally, they value good communication, since analysts must present findings and recommendations to management or clients. Being thorough, ethical, and disciplined is essential for success in this role. Question 1. What inspired you to become a credit analyst? Here's how you can answer. I've always enjoyed working with numbers and analyzing data to make informed decisions. Becoming a credit analyst allows me to apply financial knowledge and critical thinking to assess risk and contribute to responsible lending decisions that impact both businesses and individuals positively. Tip: show enthusiasm for finance and an understanding of the role's impact. Question 2. What are the key responsibilities of a credit analyst? Here's how you can answer. The main responsibilities include analyzing financial statements, assessing credit risk, preparing reports, and making recommendations on loan approvals. A credit analyst also monitors existing clients to ensure timely repayments and compliance with loan terms. Tip: mention both analytical duties and monitoring responsibilities. Question 3. What financial ratios do you use to assess a borrower's creditworthiness? Here's how you can answer. I rely on key ratios such as the debt-to-equity ratio, current ratio, interest coverage ratio, and cash flow coverage. These ratios help evaluate liquidity, leverage, and the borrower's ability to meet debt obligations. Together, they provide a comprehensive picture of financial stability. Tip: mention relevant ratios and briefly explain their significance. Question 4. How do you analyze a company's financial statements? Here's how you can answer. I start by reviewing income statements to assess profitability, then analyze balance sheets for asset-liability structure, and finally examine cash flow statements to evaluate liquidity and operating efficiency. I also compare these results with industry benchmarks for deeper insights. Tip: demonstrate structured thinking and analytical thoroughness. Question 5. How do you handle incomplete or unreliable financial data? Here's how you can answer. If financial data is incomplete, I verify information with clients or cross-check with reliable sources such as bank records, tax returns, or third-party reports. If uncertainties remain, I factor additional risk premiums into my recommendation to ensure a conservative assessment. Tip: show prudence, critical thinking, and professional skepticism. Question 6. How do you assess the risk of lending to a new client? Here's how you can answer. I assess both quantitative and qualitative factors, examining the client's financial performance, credit history, and industry outlook. I also consider management quality and market conditions. Combining these insights gives a well-rounded risk profile to support the lending decision. Tip: emphasize a balanced approach between numbers and qualitative judgment. Question 7. Can you explain the difference between secured and unsecured loans? Here's how you can answer. A secured loan is backed by collateral, which reduces the lender's risk. In contrast, an unsecured loan relies solely on the borrower's creditworthiness and repayment ability, making it riskier for the lender. The risk profile determines interest rates and approval conditions. Tip: keep your explanation clear and concise. Question 8. How do you manage tight deadlines when analyzing multiple loan applications? Here's how you can answer. I prioritize tasks based on urgency and loan size while maintaining accuracy. I use checklists to ensure all required data is reviewed systematically. Effective time management and communication with my team help me meet deadlines without compromising quality. Tip: highlight organization, efficiency, and attention to detail. Question 9. How do you evaluate a company's cash flow position? Here's how you can answer. I analyze operating, investing, and financing cash flows to determine liquidity and sustainability. Positive operating cash flow is crucial, as it indicates the company can meet debt obligations from its core activities without relying on external financing. Tip: focus on understanding cash flow as a measure of real financial strength. Question 10. Can you describe a time when your analysis influenced a key lending decision? Here's how you can answer. In my previous role, I identified inconsistencies in a client's financial data that suggested inflated revenue. After verifying through secondary documents, we adjusted the credit limit accordingly. This prevented potential losses and strengthened our risk management process. Tip: share a real-life example demonstrating accuracy and professional integrity. Question 11. How do you stay updated on financial regulations and market trends? Here's how you can answer. I stay informed through financial news, regulatory updates, and professional development courses. I regularly review central bank policies, credit bureau reports, and economic analyses to anticipate how market changes might affect lending risk. Tip: show continuous learning and market awareness. Question 12. How do you handle disagreements with colleagues or management over credit decisions? Here's how you can answer. I approach disagreements professionally by presenting data and evidence to support my analysis. I value open discussions and am willing to consider alternative perspectives, as collaboration often leads to better decision-making. Tip: demonstrate professionalism, teamwork, and respect for differing views. Question 13. What software tools or systems have you used for credit analysis? Here's how you can answer. I have used financial analysis tools such as Excel, SAP, Moody's Risk Analyst, and CRM systems to manage client data and generate reports. These tools help automate calculations, ensure accuracy, and streamline workflow. Tip: mention tools relevant to the industry and your proficiency level. Question 14. How do you ensure objectivity when making credit recommendations? Here's how you can answer. I base my assessments solely on verified financial data and factual analysis, not assumptions or external pressure. I ensure transparency in documentation and follow standard evaluation frameworks to maintain consistency and fairness. Tip: highlight ethics, impartiality, and professionalism. Question 15. Why should we hire you as our credit analyst? Here's how you can answer. You should hire me because I bring strong analytical skills, financial knowledge, and a disciplined approach to assessing risk. I'm detail-oriented, consistent, and committed to helping the organization make sound lending decisions that minimize risk and maximize profitability. Tip: conclude with confidence, summarizing both skills and work ethic. Final thoughts. A credit analyst interview assesses not only your technical knowledge but also your analytical reasoning, attention to detail, and professional ethics. Employers want to ensure you can interpret financial data accurately, communicate findings clearly, and make prudent recommendations that protect the institution's interests. To prepare effectively, review financial ratios, credit assessment models, and real-world lending scenarios. Practice explaining financial concepts clearly and think about examples that demonstrate your analytical decision-making. By combining technical expertise with sound judgment and integrity, you can stand out as a reliable and insightful credit analyst ready to support sustainable and responsible lending decisions.